Many thanks for joining us. This is Business Incorporated on Channels Television. I am BC at Debayo. Coming up, the annual general meeting of the World Bank and the IMF kicks off in Washington, D.C. in the United States. And Sasol Limited abandons a plan to sell about 13 billion rand of shares to repay debt owed by a black investor group. Plus, Sudan's currency strengthens following the lifting of trade sanctions by the United States. But let's begin from the stock market in Africa, where the positive trading recorded last week at the Nigerian stock market continued at intraday today, with the index up 0.14%. The GSE index was also up 0.44%. Egypt's market was up 0.2% after resuming from a two-day public holiday last week. Kenya was down 0.16% on Friday. And Qatar's stock market continued to rebound from a 5-year low at intraday, while other bourses in the Gulf were generally steady. Qatar's index, which has tumbled as much as 1.6% on Sunday, but finished 0.1% higher, hit 8,230 points in early trade today, gaining more than 1%. United Arab Emirates listed shares of Sudanese companies lost steam after soaring 15% on Sunday in response to a lifting of U.S. sanctions on Sudan. Abu Dhabi listed Sudatel Telecom rose 1.4%, and Al Salam Bank Sudan retreated 3.7%. The main Saudi index was down 1%, although retailer Jari Marketing added 0.5% after saying third-quarter net profits rose 13% from a year earlier. The Dubai index was 0.47% higher at intraday. And European stocks edged higher on Monday morning, with Germany's DAX index hitting a new all-time high on positive data from the Eurozone's largest economy. The markets also seem to have shrugged off Catalonia tensions in early trade, with the German DAX, of course, hitting the all-time high. Now, let's see how this is driving the market with Janelle de Melon, who's at the Frankfurt Stock Exchange. Many thanks for joining us, Janelle. So European markets seem to have shrugged off the Catalonia tensions in early trade, with the German DAX, of course, hitting an all-time high. Is that trading sentiment continuing this afternoon, and what's driving the DAX?
You are right about that. The DAX did reach an all-time high today, getting close to that psychologically important 13,000-point barrier. As you can see behind me, though, those gains have been pared back somewhat, but they were mostly driven by a better-than-expected performance on the part of Germany's industrial output. But you're right to say that generally market sentiment in Europe has been rather on the upswing today, with the Pan-European Stock 600 seeing some gains, and that is down to markets no longer feeling that a worst-case scenario in Catalonia and its standoff with Madrid is likely to happen. They draw some hope from the fact that a pro-unity rally in Barcelona over the weekend drew thousands of people coming out in support for a united Spain. It's also interesting to note that Spain itself and the Spanish index, the IBEX, has also seen a bit of a rebound from last week's backsliding. It bounced back to the tune of 0.7%, and that has mostly been driven by the banking sector. You had two of Spain's biggest banks, Banco de Sabadell and CaixaBank, both seeing their shares trading upwards, and that's mostly on the news that they would move their headquarters away from Catalonia, and that is communicating to investors that big companies have contingency plans in the bag and would be in a position to weather out any extreme political fallout in case the worst case scenario does happen, which of course is Catalonia breaking off successfully from Spain. What will happen to Catalonia itself is obviously less clear-cut, but it's bound to be a lot less rosy than the market sentiment.
Now, the European Central Bank has released its stress test results on the potential impact of interest rate changes to the area's banking system, and it says that the interest rate risk is well managed in most European banks. Is this a trading theme in the market today?
You know, maybe not on the daily level. As I said, the market today has been mostly dominated by political guessing games, as it were. But even if it's not the daily driver, even if it's not the thing that's most moving markets today, investors are still watching very closely what this could mean for the banking sector at large. Now, one of the things that will be relevant to investors as a result of this stress test exercise is, of course, the ECB will use it to determine how large capital buffers should be in European banking institutions in order for them to weather financial shocks. And another interesting thing that made investors sit up and take note is the fact that the ECB said that the models that the banks might be using in order to predict customer deposit behavior might not be the best ones, because they're based on a time after 2008 where falling rates were the norm. Now, of course, we're looking at a banking industry that's seeing some change somewhat, that's seeing some disruption out of the so-called fintechs, out of smaller peer-to-peer lenders that may be offering customers better deals than traditional banking institutions have. As such, the ECB has said that it will spearhead a discussion with banks regarding these models. And of course, if banks are in a better position to be able to predict customer deposit behavior, that would be helpful to them as well. Know that deposit, of course, is an important financing pillar for lending institutions. A healthy banking sector is the bedrock of business finance, and as such, investors will be interested to know which way this discussion goes.
Now, before you go, Janelle, talk us through the report of a rift at the German lender Deutsche Bank between its largest shareholder, John Cryan, and the chairman of Deutsche Bank's supervisory board, which has seen the bank's shares drop today. What will that mean for the bank?
Well, this is a story that's come off some reporting from the Wall Street Journal, and it basically has to do with Deutsche Bank CEO John Cryan saying that he wants nothing to do with H&A. H&A is a Chinese conglomerate, and it holds about just under 10% of Deutsche Bank shares, so that makes it its largest shareholder. And those comments have apparently caused some irritation on the part of Paul Achleitner, that is, of course, the chairman of Deutsche Bank, and he was instrumental in getting H&A on board. Now, we're getting the sense that since this report has come out, John Cryan has felt the need to do some damage control, saying that he hasn't gotten the chance to meet with H&A yet, but of course he will. What this will mean for the bank is not entirely clear-cut just yet, but what it certainly means is some added awkwardness for Deutsche Bank at a time where Cryan is struggling to convince everybody that his turnaround strategy is working. Let's not forget that Deutsche Bank has posted some 8 billion euros in losses in just the last 2 years alone, and this is also coming at a time where Chinese involvement in systemically relevant sectors like banking are experiencing ever greater scrutiny within the European Union. So really, the spat between Achleitner and Cryan is being seen as a bit of a proxy for larger tensions in the region regarding the involvement of Chinese money in European business.
Many thanks, Janelle, for those updates, and we'll see you again tomorrow.